Hello, everybody. It is great to be here one more time today. And my name is Gary Fowler, and I'm the CEO, president, and founder of GSD Get You Done Venture Studios, a premier AI and quantum venture studio located in the heart of Silicon Valley. I'm a 17-time serial entrepreneur with several unicorns under my belt. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company that I co-founded with Dr. David Yang. We believe at GSD that intellectual capacity is evenly spread around the world, but opportunities are not. And with that, I have an incredible guest today. Kumesh Aroomoogan is a serial entrepreneur. He's the co-founder and CEO of Accern, the leading no-code NLP platform which categorizes and analyzes textual content for financial services. He's raised $40 million in venture capital. He was listed as 30 under 30 for Forbes for enterprise technology among Fast Company's top 50 next big things in tech and financial technology reports, top fintech CEOs. And with that, I'd like to bring Kumesh on. Hi, Kumesh. How you doing today?
Hey, Gary. Doing good, and you?
I'm great. Fantastic. Actually, I just got back from Poland. So
Oh, no way.
I feel a little bit, I was speaking in Gdansk, and it's on the Baltic. And it was quite interesting because I thought there would only be a few thousand people. Turned out there were almost 8,000 folks come
Oh,
in,
wow.
and some incredible technologists. And a lot, by the way, came over from the Ukraine. So a lot of Ukrainians are in Poland. That was an electric atmosphere with some really, really cool and exciting companies.
That's
So,
awesome.
so tell me a little bit about it. So you went to Pace University. Now,
Mhm.
how did you go from, you studied at the Lubin School of Business. How in the world did you go from being a CPA to starting your own business?
Yeah. So I was essentially working at Citigroup. So I was in the equity research side at Citi. And essentially, what you do as an equity research analyst is you look at different types of companies and you research them. You look at millions of news articles on a daily basis. You go on Bloomberg, you go on FactSet. You try to research everything on these companies and you create research reports. And every day you're doing manual labor. It's kind of like manual work that you're doing. And a lot of banks have been hiring a lot of analysts like myself to really scale up on a number of companies they can cover and create these reports. And my idea was like, how do we automate this entire process? And so while I was at Citi and a few other companies, I thought about enterprise workflow automation. So how can we really automate the entire workflow process of the enterprise versus them having to scale with people to increase the level of activities they're doing? So that's kind of how we got started with Accern.
Well, but how do you go from being a general accountant or a financial analyst, but there's a one day you woke up and said, "Oh, I want to be an entrepreneur." All of a sudden, I've thought about it, and that's what I want to do. Did you? How was that experience? What was it like?
Yeah, it's when you work a 9 to 5 job, you're putting in a lot of effort. I usually put in way more effort than going to 5 p.m. and calling it quits. So you put a lot of effort, but the pay scale is not exponential. And so I was always like, all right, how do I dedicate a lot of my time, a lot of my energy, but have that exponential growth? And the only way you can do that is really starting a business and going into startup world and really taking some idea that you have a strong passion on, you see a large market, and just trying to scale it, put all your efforts into that one basket, and hopefully it becomes a success.
Now it's interesting. We're getting some comments. Some folks from Poland are coming on, and they're saying, "Oh, so great to hear you had a good experience in Poland."
That's great.
Yeah, I mean, by the way, there's lots of incredible offshore development companies. A lot of companies. I don't know, Kumesh, how much you focus on the Central and Eastern European market, but there's
Mhm.
incredible companies there that are basically untapped, and
Yeah.
most people don't know about them. And
Mhm.
so, yeah, it's pleasantly surprising. By the way, so if you
Yeah.
need any resources, there's a couple that just came online and they're listening to you today.
Oh, that's great. Yeah, we're always looking for a resource on how we can optimize
Yeah, yeah.
costs. Or-
So Nicole and Thomas. So if you know anybody, that's looking for some that has offshore developers might be interesting. Kumesh could be interested in it. Just make sure they're the best in the world, which I know you have there. Really good one. Okay, so what was it like? You went to the Ford Foundation. What was that all about?
Yeah, so the Ford Foundation, essentially, I was doing accounting there. There was really no equity research or anything. It was just boring old accounting, but it was me just getting a head start in the corporate world, just understanding the corporate world, understanding what 9 to 5, how the 9 to 5 things feel like. And end of the day, it wasn't for me. I want to do something I have full control over, and I can put all my energy into making it grow. But it was a great experience. The people there at Ford Foundation are doing a tremendous amount of great things.
Well, what is a Ford Foundation anyhow? What do they do? Is it like a philanthropy or what is it?
Yeah, it's a nonprofit. Originally, it was funded, I believe, by Henry Ford, and it's basically a nonprofit for social causes. And I believe it is a nonprofit, but they don't accept outside funding. I believe it's just internal funding, and I think it's
So
one of the top
they
five.
just they only accept inside funding, you're saying?
Yeah, I think it's from just the family itself, the Ford family.
Really? That's interesting. And how big is the Ford Foundation?
It's pretty big. I believe it's the top 10 or top five nonprofits in the world. I might in terms of them accepting funding from outside or inside, maybe that might have changed. But when I was there, I believe it was just the Ford family.
That's amazing. Now, did you meet members of the Ford family?
I have not, but the company was so small. I believe it was less than 100 people or so in just one building in 42nd Street in Manhattan, and we got to meet everyone within the company, even the president of Ford, and it was just a great work culture there, and it was one of my first
That's super.
experience.
That's really cool. Well,
Yeah.
that's and where are you from originally? Are you from New York originally, or where are you from?
No, so I was born in South America in British Guyana, and I came to New York when I was 7. So I've been in New York for I think about 23 years or so now. So it's been a while.
Now, do you get to go back to Guyana or not?
No, I haven't went back in decades. Yeah, I haven't went back, but all my family came from Guyana, and now they're in New York City. So no reason to really go back.
And how is it down in Guyana?
Yeah, so it wasn't that great when back in the days, but now they actually discover oil, so the GDP is
Woo, there
increasing
you
quite
go.
a lot.
I hope you guys got some land down there still, and you take advantage of it.
Yeah, so it's somehow getting really good, but previously a lot of crimes and so forth there.
Wow, that's great. Well, you've been through a lot. Now, how in the world did you so you get into the 30 under 30. Now, how did you get that? Now, where did that come from? Who gave you the that recommendation? Where did it come from?
Yeah, I think it was just a few supportive investors. So the list is kind of a blacklist. Like you have no idea on how you're going to get it or what the criterias are. So no one really knows the formula of getting that. So we got Forbes 30 and 30 back in 2018, and we were for enterprise technology. That's when we closed our seed round. Um, and so, yeah, we have no idea how we made the list, but it happened. And actually, in the same exact class of Enterprise AI in that same year was the co-founder of OpenAI as well.
Who was that? Which one?
I think it was Sam Altman. I think it was, yeah.
Wow, that's amazing. Now, do you still talk to him?
No, no.
No. Hey, Sam, what's going on? You got any shares maybe or something like that I could get into?
Exactly.
Wow.
Yeah.
So then, what about Lazarus? What is that all about? The product design agency. Who has that? Is that yours or?
No, no, no. So it's one of my. So actually, that was one of Accern's first designer. So we hired him as our first designer, and he then built the entire design agency. And then I just basically started supporting him as just an advisor. And so now he's one of the largest product design agency in New York City, serving some of the top startups from Series A to Unicorn. And
Wow.
he's in bed with some of the top tier VCs, and they're all using him. So it's great. Even we're using him at Accern.
Now, how long ago was that? When did you get started with him, and how long ago did they get founded, Lazarus?
Yeah, so he started the company about 7 years ago. We actually been using him, the CEO, as our designer. I would say 7 years ago too. So he started ever since, and he took it off. He started scaling it, and I recently met him up at New York City a few months ago, and he wanted some introductions to VC firms and some other companies, and so I just became an advisor, and I've been helping him out, connecting him to investors. So potentially get some business from.
That's fantastic. So, what about you've got this Aroomoogan Capital? Your family's, is that yours? Is it a family office, or what is that?
No, it's just a venture syndicate that I have. So I have a lot of friends that are doing startups in the enterprise AI space and the fintech space, and they're all looking for capital, especially in this market. And we have a lot of investors on our cap table. I also know a lot of investors that's looking for enterprise AI deals. So essentially, if an investor is interested, we would spin up a syndicate and we would invest in these companies. And typically, we would invest anywhere between 100,000 to a million, depending on deal size. But I just started. I'm not managing any of that. I just have a guy that's running it because Accern is just taking up 110% of my time right now.
Well, that's great. So, I mean, the idea behind Accern is you're driving operational efficiency, right, and revenues for some of the largest financial services enterprises.
Mhm.
And you're doing this low code, the first low code for platform as a service, as I understand. Is that correct?
Yeah, so we were actually one of the first no-code natural language processing platform in the market. And we were actually very early in terms of using large language models. So as you can see, there's a lot of hype when it comes to generative AI right now, and people are going crazy for large language models. But large language models have been out for years now. And we were one of the first to actually implement large language models. We basically use Google BERT and we tweaked it for financial services. And so we customize that large language models for financial services, and we start selling that to a lot of hedge funds, a lot of banks and insurance companies with extremely high accuracy.
Now, that's fantastic. So, what kind of, if you look at it now, what kind of revenue do you have at this point? How big is the company?
Yeah, so the company right now, we're at about 40 plus employees, and we're headquartered in New York City, but we have three locations. So we have New York, Canada, and Bangalore, India. In terms of size, we have about 20 enterprise customers right now, approaching about 5 million or so, and we're expecting to hit about seven this year. And so right now, we're pretty much trying to scale up the revenues aggressively, and we're getting some really good traction in the recent weeks.
So, you've raised $40 million in venture capital, right?
Yes,
So, how easy was it raising that money?
it was very difficult. So when we started the company, we started about 2014 or so, and we bootstrapped from 2014 to 2017. That was when we were trying to figure out what the product is going to be, who the customer is, what's the go-to-market strategy, and so we got some revenues from 2014 to 2017, and then 2017 is when we raised our first round of financing, and that was our $1 million seed round. And it was very difficult to raise that round. I think that was one of the toughest round to raise because when you come from a background with no connections, it's a little difficult to get into the venture space. If you have no connections, it was very difficult back then.
What do you
Um,
mean by that, Kumesh? What do you mean no connections? Tell us what it's
yeah.
about. How does it really work?
Yeah, so when I say no connection, as in you, so when you come, so essentially I graduated college and so forth. I was the first in my family to graduate college. And then when I decided to do the startup, I went into a space where it's very hard to break into. First, financial services. You'd have to get in touch with hedge fund managers. You have to get in touch with banks. So first, that's the first barrier. And then second, you need to get in touch with VCs. And so the way we have been getting in touch with investors in the early days was just going to pitch competition. So we would basically pitch the company and win competitions and then try to network with a lot of investors.
Did that
And
help though, Kumesh? Does it help when you do it that way?
it helped open up visibility. So one of the pitch competition that we went to, it opened up visibility to Accern and to what we were doing. And we had a few people approached us, and that's how we actually got our first angel investors. It was through a pitch competition in New York City. And so once we got our first angel investors, they started introducing us to their community and their friends. And then that's how we start getting additional investors as well in the company.
Interesting. So and how big of a check do angel investors write?
Yeah, so our first couple angel investors. So when we did the seed round, we got introduced to someone named Mashi Newman, who basically was our first investor, and then he introduced us to a lot of other of his investor friends. And the typical check size was about 100K or so. So we closed $1 million seed round literally within 2 weeks based on introductions. And the check size was ranging anywhere between 100K to 250. And we closed that $1 million seed round, and we took that capital and we start innovating on the product and go to market from there.
Well, and then how did you go about, when did you decide to do the A round? What round is your last round?
Yeah, so we raised a total of 40 million. The last round that we raised was the Series B, which was last year, April, and that was a $20 million Series B round. But the A round, we did a $13 million Series A round in March of 2020. But what's interesting is during the fundraising journey, and I see this with a lot of my founder friends, is that sometimes in the news, when you say you raised that $13 million A round, you're not getting $13 million in new capital. Some of those capital have been raised before as form of convertible notes or SAFE, and they get converted in. But you kind of package it into a number, which is the 13 million. So between 2017 and 2020, we raised a few convertible notes in SAFE just to accelerate sales, accelerate product innovation, and then we got the Series A and we packaged it in from there.
Now, did you do a Series B? How big was around your Series A?
Yeah, so the Series A was 13 million, and then we did a Series B of 20 million last year.
What was the difference, in your opinion, between the A and the B, besides the money? Was there any difference in how people viewed the company?
Yeah, so for a Series A, essentially we had a really good product. We just need to accelerate go to market. And so we raised the Series A to now actually go to market with the product that we have built and we have raised the capital for. The Series B, the way they look at you is, all right, you have some initial market traction, you have a solid product. How can we use the capital from the Series B to fuel growth long term? And so that's the from the Series B capital. Essentially, we try to make investments in sales and marketing to grow from there on.
Did it help?
Yes, but when we raised the Series B, we raised it last year in 2022. And that's when the venture market started going downward. That's when valuation was going down. There was a lot of layoffs, tech layoffs, and so forth. Everyone was focusing on profitability. So the funding landscape shift from growing at all costs, like we're going to give you a ton of money, go hire like crazy and win market share as quickly as possible, to go lay off and cut as many people because you need to get a profitability because we have no idea when VCs are going to fund companies or so. So there was a shift in mentality and shift in mindset. And so we had to make some decision as well in terms of reducing headcount to get the profitability faster.
Well, that's amazing. And so, what's the market like now, Kumesh? You talk to a lot of people up in New York. What do they say about the market? How does it feel?
In terms of the VC investing or the startup?
VCs, are they up or down compared post Series B or post Series A? What's it like?
Yeah, so the VC market right now, I would say in the last few months, things have been slowed down in terms of the VC investment landscape. So VCs are investing in less deal, they're holding onto their capital and waiting for the best deal to show up. And because a lot of startups, they have raised money 2 years ago, and they didn't want to raise another round last year because valuation multiple.
Yeah, they don't want to dilute themselves either, right?
Exactly. But then they're realizing that the VC market isn't getting too better. It's getting a little better than last year, but it's not getting as better. And so multiples are still down, but the startups are running out of runway. And so they have no option but to do a down round. And that's the perfect timing when the VC is going to come in and say that, all right, now we got you at a discount. That's what we're seeing a lot right now.
That's amazing. Yeah, they're holding off to get better deals.
Yes, exactly. But the other thing too that we've seen with some of our with some of the VC firms, because we're very close to a lot of the LPs, some LPs are also getting pressure to deploy capital because they're getting paid a management fee for their fund, typically a 2% management fee a year to manage the cash. But if they're not deploying, they're not working essentially. That's kind of how the
Yeah,
LPs.
no, I know that. I mean, the thing is, it's like, I looked at it and I said one time, you've got the inside of those family offices, or inside of those VC funds, you got a lot of high net worth individuals,
Yeah.
pension funds, insurance companies, all that. But the people that are in there, a lot of times, you don't want people to know what they're investing in. These families
Mhm.
are kind of clandestine about it. But the other side is we're seeing them come out. They're coming out of the woodwork because they want to be involved in the process.
Yeah.
They want to look at the AI companies. They want to invest in AI companies. And you get a family that's worth, 50 to 100 billion. Everything changes if they take you under their wing. Why?
Exactly.
They can take you out to the company their family's founded, and it changes everything.
Mhm.
Everything for you. So
Yeah, it's crazy.
opportunities are right out there.
Yeah.
So all those startups out there, you got to think about when you're raising funds, think about the impact of what it's going to be on you, and also think how you can do it as fast as you can with the right savvy type of investors.
Yeah.
Yeah, no, that's fantastic. So tell us what's the future look like in terms of Accern, in terms of yourself. Are you going to stay in New York? Do you want to sell the company? What's the end game here?
Yeah, so from a go-to-market standpoint, we're global right now. So we're in multiple different countries. We have some of the largest banks, top-tier banks that's customers of ours in South Africa, in the US, in Japan, a lot of different places. So our number one goal right now is how do we expand fast enough? How do we win more customer? How do we win more market share? And initially, we have been always focused on financial services because we trained our large language models or NLP models for financial services. So when a financial service customer uses us, they're getting the highest accuracy, and plus we're no code, so their less technical users can use us. But going forward, we want to now break out into financial services and go to additional verticals as well, because that's just going to open up the market size. We want to partner with a lot of consulting firms as well that can be our third-party sales team at the end of the day. So our number one focus is how do we grow the business? How do we accelerate sales and go to market? But then on the other hand, we have been getting a lot of acquisition offers and interest as well in the last few weeks because a lot of these large tech companies, they are a little behind when it comes to generative AI and NLP. And they see a company like us, no code NLP platform that's been around, that's doing really cool stuff. And they feel that acquiring us is going to really accelerate their product roadmap, accelerate their market penetration, and increase their market cap. So there's those things coming as well that has been interesting.
Now, who makes a decision on whether to sell or not? Is it the board and the investors, or is it you yourself? Who makes that decision ultimately?
It's the board. So it's a board decision. If the board is happy with the offer, you would sell. If not, we would continue growing the business, get the revenues, and sell the better price after.
Wow, That's amazing. I love hearing these stories. This is fantastic. So now, are you going to stay in New York all the time? Where are you right now? Are you in New York or not?
Yeah, I'm in New York, downtown financial district. So I've been here for quite a while. I don't think I'm gonna move. I love New York. I travel so many states, but every time I come back to New York, it's the best state. It's one of the best states that I just love.
It's calling you. That's great.
Yeah.
When you know it feels like home. So we're coming to the top of the show. Kumesh, what are some closing thoughts that you have for other startups around the world in terms of how to be successful? And the other thing is, how do you deal with these turbulent times that we have now, where I tell them to look forward and believe in your dreams and go out, and if you're going to try to raise money, go try to raise money, but just don't talk about it, just do it.
Yeah, I mean, there's a lot of lessons learned from the past years that I've done Accern. I mean, the biggest one is if you're an early stage startup and before you even raise capital, just make sure that there's product market fit. Because if there's no product market fit and you take venture capital, they're gonna push you to hit certain sales target with a product that doesn't have product market fit, which is a formula for failure. So making sure you have product market fit is the first thing. And then in terms of once you take venture capital funding, just focus all out on sales and go to market. Because once you're generating revenues, everything falls into places. You're going to get investors chasing you. You're going to get customers. You're going to get acquirers chasing you. So revenues is the gold mine.
Yeah.
So yeah.
It's not like it was a couple of years ago where you could not have any revenue and you'd be getting tens of millions of dollars in funding. It was irrational exuberance. It's amazing. Well, you're doing a great job. What's the best way for people to get a hold of you, Kumesh? LinkedIn, Facebook,
Yeah.
What's the best?
Feel free to connect with me on LinkedIn, just my name. And you can also send me an email at kumesh@accern.com, KUMESH at ACCERN.com.
Nah, it's fantastic. Well, Kumesh, thank you for taking time out of your busy schedule to join us today for GSD Presents Silicon Valley AI and Tech. My name's Gary Fowler, and I'm your host. This is another exciting addition. Kumesh's company, Accern, has done an incredible job. He's moving in the right direction. So for each one of you out there, there's a hope, there's a possibility. You can raise money now, but you got to be surgically focused. You go out and you got to do it. It's not about a shotgun. It's about a laser beam. So with that, Kumesh, stay happy, stay safe, and stay healthy. And to all my audience out there, I look forward to seeing you again Thursday for another exciting edition of GSD Presents. My name's Gary Fowler, and I'll be back to you soon. Thanks, Kumesh.
Great. Thanks, Gary. Appreciate it.
Bye-bye.